night and day. We've had a manipulated metals market, in my view, particularly silver, but also in gold. The unleashing of the loss of value in debt, as that debt market goes down, will be the freeing up and the forced price discovery mechanism in gold. Because you're going to have this 40-year fraud that ran from 18%, and they got the Saudi petro deal provided, price in oil, price in dollars, recirculate your money into bonds, creating a natural buyer. That isn't there anymore to the same degree. They've created so much debt.
Gold prices have soared to new record highs as investors flock to safe haven assets amid escalating concerns over U.S. tariffs. The growing uncertainty surrounding the White House's plans to impose significant tariffs on Mexico and Canada and the potential addition of China has heightened market volatility. In addition, a weaker U.S. dollar and falling Treasury yields have further fueled gold's appeal among investors seeking stability. The recent imposition of massive tariffs on China, Canada, and Mexico has sparked speculation. Is this truly about trade, or is it part of a broader economic strategy? Francis Hunt, also known as the market sniper, sheds light on the situation. Hunt believes the current manipulated metals market, particularly silver and gold, is on the brink of unraveling. He predicts that the collapse of debt markets will trigger a forced price discovery in gold, allowing its actual value to emerge and ending 40 years of manipulation. As global public debt skyrockets, with a record-setting $97 trillion in 2023, many nations spend more on servicing debt than on crucial sectors like education and healthcare. This financial strain is compounded by the increasing costs of addressing climate change challenges, such as extreme heat and storm recovery. Hunt further suggests that the U.S. may not have the unencumbered gold reserves it claims when the dust settles. The flight of gold from the west to the east is already more significant than most realize, and Hunt warns that the full scale of these shifts will lead to shock and disbelief as the truth behind these dynamics is revealed. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
And this is why I think America's having a run on gold behind the doors. They are putting it under the catch-all of, the volatility of the tariffs, because that's also come about. And in actual fact, to stay whole in terms of those that are actually asking or calling and no longer trusting counterparties to hold gold, the British, as a special relationship, are shoring up America potentially. And that is why gold is coming in. And that gold's not being tariffed. And even though the announcement now is subsequent to that, any new gold coming is not tariff. It's not going to be treated as product and service. So I think that's a lie. It's a misnomer to hide an inconvenient narrative of a nation needing shoring up in the precious metals department. And I think when the whole thing blows up, you're going to find out that the US doesn't have the metals in their name unencumbered or unhypothecated elsewhere that they claim to have, and that the flight from metals from the west to the east is far, far beyond most of our understanding, and we're going to be in a state of shock and horror when the curtain is fully pulled back, and we're seeing the last moments of that that's currently in play. And what's actually going to happen in my personal aspect is it's going to become far harder to move metals cross-border and out of the US. And people should watch for that. So it's going to be plenty easy to get it in. Try getting it out. And other nation states. So I'm not Americanizing this. It's going to be a thing. And everybody's going to be very conscious. And I also want to forewarn that China has been ahead of most games in all these things and has been not only mining the largest miner, they've been the biggest importer, going through Hong Kong, Beijing. They've also been the biggest black market player in Africa. I've experienced this personally in Zimbabwe in subsistence mining. It goes to the Middle East, gets malted, and it gets sent there. So they have been hoarding, and they've been telling their citizens, buy the gold on the basis that it's in border and there's a discount window and everybody should be exploiting it. And that's the payback for sitting in debt that is devaluing. So they need to maximize that discount border, because they are aware they can't sell their, let's say I don't know what it is exactly anymore because they've lost so much value on it, but approximately $1 trillion, let's say, either a little bit below, a little bit above, of US debt. They know they're sitting with a rotten apple in there. So they've got to stack the other basket to counterbalance that. And the discount window is it. And the good thing about the desk-based collapse, there's this beautiful DiMartini type thing of night and day. We've had a manipulated metals market, in my view, particularly silver, but also in gold. The unleashing of the loss of value in debt, as that debt market goes down, will be the freeing up and the forced price discovery mechanism in gold. Because you're going to have this 40-year fraud that ran from 18%, and they got the Saudi petro deal provided, price in oil, price in dollars, recirculate your money into bonds, creating a natural buyer. That isn't there anymore to the same degree. They've created so much debt.
Citi Research has recently revised its gold price projections for the near term and 2025, raising its forecast amid ongoing trade tensions and geopolitical uncertainties under U.S. President Donald Trump. The bank has increased its 3-month target for gold to $3,000 per ounce, up from $2,800, and lifted its 25 average forecast to $2,900 per ounce from $2,800. This revision comes in light of the firm's central bank gold purchases and the turbulent global economic environment. Meanwhile, in the cryptocurrency market, Bitcoin saw a surge following Trump's agreement to a 30-day suspension of his tariff threats against Mexico and Canada, temporarily alleviating some of the trade concerns. Bitcoin's price spiked from nearly $92,000 to over $102,000, fueled by hopes of a quick resolution to the trade conflict. However, new actions by China have dampened the recovery, causing Bitcoin's price to fall back to $98,500. Similarly, Francis Hunt shared his long-term bullish outlook for gold, but cautioned that a demand-destroying event could cause a temporary spike in the dollar, potentially curbing gold's price gains. He advised caution with higher beta assets like Nvidia stock and cryptocurrencies, particularly as gold approaches the $2,900 level, highlighting the importance of respecting gold's stability during volatile periods. Now let's redirect our attention to a video.
So I'll make a couple of interesting points that I keep making, and I really want people to recognize. But let's just first, how's gold looking? This is an HVF setup, so this is something we specialize. It's our community, and we actually actively trade this. So we are leveraged long gold throughout what is actually turning out a crisis, but has turned very beneficial for gold. And we're expecting the 2,900 level. You'll see a target of 2,897. We also have a much bigger time frame, a bull flag. That's also here. You'll see 2 purple lines. Purple are what we use for our targets there. One is this current setup on a smaller time frame, the daily, and the other one is a much larger one on a weekly. We're getting a confluence of targets here. So everyone's going to get super bullish gold, and I'm going to actually step out and call a localized high around the $3,000 mark as we run this. Why? And will it go higher? Yes, in time, but I think other things are going to come into play that are going to potentially put a little bit of a short-term, maybe medium-term stop on markets. They don't go up in straight lines. That said, we see 6,800, 7.5 on bigger time frames. There are more technical targets. But when you reach a confluence, that's 2 patterns that give you the same level. I never ignore that fact. So we are net long. This was a little bit of a shooting star on Friday. So this is the daily time frame. And then you traded down with all the drama of the tariffs that are being spoken about, and you've shrugged it off and you've come back up to give a hammer. This just turns into a range-defining move. There's your shooting star. You were knocked back. People were expected a bit of risk off with the tariff narrative. Some of the insiders on Friday, you've got to say there must be insiders. By the way, that's at our second interim level where we expect a little bit of pullback action. So there's a pause. That goes all the way down here, which was around 2,770, and all the way back up a hammer. So what's actually happened is you've ridden the pullback and you've been rejected. The demand for gold hasn't gone away. Now, if I just highlight from the very highest point over the last 2 days to where we are now, and I'm going to make a point about Bitcoin and crypto markets as well in this. If we just go get the measuring tool, how badly are we off the most recent high? By the way, this is the most recent high against all currencies. So at its worst point in this crisis of tariffs, you sold off 1.59%, and in the same day, you're already back up. You're only 0.54% off your current all-time high, which was recently created and is across nearly every single currency that is at an all-time high. Now, I'm going to do the same thing, Bitcoin, just to bring some perspective why gold is your stability, is noble money, and everything else is a pretender to me. albeit playing some role and having higher, alpha to the upside. It's how well your money does when you need it most. During the bad times, that counts most. So if I just pivot this to the daily and we do a like-for-like comparison, 0.54% is how much you are down. In the last few days, and in fact, the last week, it's not like-for-like if I say the last week, but from your high in Bitcoin, you've actually gone as low. You've lost 16% from your all-time high at about 109 down to the 91. And at the moment, you are from your all-time down 95. And if we just take the same 2 days as I did for gold, at one point you were down almost 10%, and you are down 6% in just the 2 days. Now, I think it's going to find support here, but it's just an interesting argument that doesn't get discussed. You're going to need your money most when everyone else needs it. When the grid goes down, the new recession comes in whatever form, depression, that's when you're going to need to sell. The low beta to the downside is the gift. How much you once were at a high water mark when it was pumpermentals is actually of less relevance. How hard is your downside beta as well? So while we talk gold, let's respect it. 2,900, big target. Where did the other 2,900 target come from? Just to finish this segue that I'm giving you on the gold price, that came all the way from here and from this continuation pattern we had here. So we had a big up leg from there to there. It's a big, sorry, down here. You'll see it down here. Let me pull a little bit more history in. We had a lengthy continuation pattern where 2K was the ceiling. We kept getting rejected at 2K, rejected at 2K. We said once, twice, 3 times a lady. You break it on the 4th time, which you did. You had a sit back as support. That was our leverage long moment that said that'll be a great long to hold for an extended period. You're getting a final one, and then I think we need to step back. There could be something coming, and that could be a very, very disproportionate dollar spike that occurs that even takes for a temporary period the steam out of gold's sales once all this gold has been reappropriated. So watch what's happening. We could go demand destroying event after 2,900. I would be very cautious, particularly the higher beta assets like Nvidia stocks and crypto when gold hits the 2,900. I think we rest. There's one other alternative. It could have a blow off and finish the 3K. But I will point out every time we've come close to 1,000 mark, we get rejected.
Gold prices are soaring amidst escalating trade tensions, geopolitical uncertainties, and central bank gold purchases. Citi Research has raised its gold price forecasts, targeting $3,000 per ounce in the near term and $2,900 for 2025. While gold's outlook remains bullish, the potential for a demand-destroying event, such as a temporary dollar spike, could slow its gains. Higher-risk assets like Bitcoin and stocks, particularly in the face of ongoing trade disputes, also remain volatile. As we move forward, it's important to stay cautious and consider the evolving dynamics of both gold and broader financial markets. What do you think is driving the current surge in gold prices, and how long do you expect this trend to continue? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.